Hello and welcome back to this dividend portfolio. I'm going to go over the portfolio today with what dividends have come in so far this month. Today is Friday, December 5th. So far for the month of December, we have brought in $194 in dividends, and we're on track to either match or get just above what we brought in November. And I'm going to go through some of these dividends with you real quick. Um, Other things, this brings our grand total dividends for the year so far to $1,440, which is pretty good. Other videos I've gone over some positions I've cut and some positions I've added. And before we go any further, just a reminder, this is not financial advice. If you're looking to invest, you may want to seek a financial advisor. Um, any money that you can't invest, you could lose. This dividend strategy, I wanted to show how a dividend strategy could work. This might be part of a larger portfolio, and let's go over this. So down to the charts, this one on the left is the total for the whole year. This should say December down here, but it didn't come in for whatever reason. And so this is just the sum of all the dividends. And then on the right here, this is the monthly dividends per month. Generally, we trended up and to the right, which is good as we have auto buys on plenty of these positions. Down here are the positions. Um, but we did cut some that were really high risk. They were high dividend payers, but they were high risk and they were just losing value despite the dividends coming in, and they basically broke even. We have one higher risk position still, which is SPYT, um, and which has a 19% dividend yield. And right now, the the holding itself is down 1.96 on the performance. I updated these performance so we can see a little bit more of the movement on the performance. But the dividends that have come in are greater than what it's gone down. So it still is overall in the green. The reason this matters is this position, it's 23% weighted in the portfolio, and with this high dividend yield, last month it was brought in $47, and this month it brought in 104. We saw another $105 dividend back in August. That was in a much riskier position. This is, I consider, less risky, although it is still risky. We got this $104 dividend, which I'm going to continue holding this position. So that is super cool. And what we're on track for, we'll go into that next. So 194, and these are all the dividends that have come in on this bottom row. We've got a $6, $16, $21 going across. These don't necessarily line up perfectly with the ones above it, but we can make an estimation. I did look at the end of the month for other months, and basically we should be getting, at minimum, we should be getting a $30, a $21, and a $13 over here. These came in the previous month, and we're still waiting for those for the end of December. So if we add these up, we get 65. And if we take our 194 and we add the 65, that'll put us at $260, which means this chart over here should be just higher than the previous month. So if we average this out, despite the fact we had these, I would say, going forward higher than normal dividend months. Um, this will come in at, we can actually put this in. We'll put in 65 here to see what that looks like. It should look about like this, just breaking $250. Um, so that is what I expect the chart to look like at the end of the month. And, just to go back over some of the reasons why I'm doing this portfolio, I'll go over the performance next. I wanted to inspire some people about a passive income type of strategy. And there's different ways people can go about either gaining extra income or passive income. Some extra income is some kind of side hustle, and that can be a lot of work, but it can be good money. Some extra job outside of maybe your main career or main job. But some of this comes from the Rich Dad, Poor Dad. And I just made this little summary of what he's talking about. Robert Kiyosaki, author of Rich Dad, Poor Dad, defines an asset as something that puts money in your pocket, meaning generates positive cash flow. So an asset is something that generates cash flow. A liability is something that takes money out of your pocket. His core theory is that the path to true wealth is to focus on acquiring assets that pay you. And we want real passive income as something that pays you while you sleep. Like businesses, income generating real estate, stocks, or bonds. And so we can hold regular stocks, and if you have, you know, this is just part of a larger portfolio that might have regular stocks or bonds, but this one is focused just on ones that pay dividends. We want something that pays us every month while we sleep, all of that, so that your money works for you rather than working your entire life solely for a paycheck. So we want to take that paycheck, put it into things that then generate more money. He argues that the poor and middle class often mistakenly require liabilities such as primary residence or an expensive car, which end up costing you money in the long run, even though they believe those are assets. Um, so that is the general theory, and I've got my calculator out here, and so if we take, let's say we end up with $260 for the month of December. If we divide that by 31 days, that means that right now this portfolio is generating $8 a day. Whether we do anything else, um, this some of this is in something called a Roth IRA, where the taxes are um, not needed to account for, and some of it is in taxable accounts, so there will have to be taxes paid on what comes in as well. But generally speaking, we can say we're making about $8 a day from all of this, just on a quick and dirty math. Um, so next, these are all the holdings. These two at the bottom, CSWC and ASGI, are the most recent additions, and on the left are the weightings. And here's the yield that all of these, the dividend yield that all of these have. The weighted average with all of these is a little over 11%. And we want a variety so that we're diversified. And the performance, so in this column here, this is the performance last time I did a video. So I wanted to update this. So I made this column new performance. And so this will just show the difference. So JEPQ is up a tiny bit. SPYI is up over 1%. QQQI is up. GPIC is up. JEPI is down about 0.5%. SCHD is up. As PHD is down over a percent, JAAA went down. SPYT, which is this riskier one, is down a little over 1%. JBBB down less than half a percent. CLAWS down less than half a percent. IWMI is up a percent. CSWC up a little bit, and ASGI is up 3% since the last video. So we can see most of these went up by a little bit or a lot, and some went down. So that's kind of looking at the performance, how these are moving, and um, you know, like this CSWC is this position here, and on Yahoo Finance we can see over here, this is the dividend yield, 14.36%. And I think, I don't know where I saw that, it had the performance for the whole year. Oh, here we go. It says year to date return. I think this is with dividends. Not sure. It says this is up 11% for the year. And you can even go into this community tab here and see. Not all these comments are great, but they can show you some stuff. This person asked, did this start paying monthly? So I guess this used to be a type of dividend that only paid usually like 4 times a year. Other types of news people sometimes put in things on the dividend. Sometimes you can find people will share, they're increasing or cutting their dividend. And generally, reading these seem like good things. This can be defensive, things like that. So I've been happy that I found this one, and it looks probably like it's going to be healthy, and so that is the update with the portfolio, targeting about $250 for the month of December. And um, again, I wanted to inspire people that they could potentially start doing this. We started back in April, so we haven't been doing this quite a full year yet. But even starting back in April and May, we were bringing in $15 a month, $65 a month. I think it can be good to set certain target goals. When am I going to get my first $50 a month? When am I going to get my first $100 a month? Things like that. And, showing that we're up to making $8 a day can be cool to look at. When am I going to make $1 a day? And this is bringing in whether, I'm working or sleeping or whatever. I think that this is one of the most truly passive forms of passive income. So, what's next? Lastly, I'm just going to do another little inspirational thing. Going over to the compound interest calculator. This is from investor.gov. If you just go on Google and type in compound interest calculator, look for the investor.gov one, and I think there's all sorts of different ones that let you put in a lot more different fields and stuff, but this one's just also kind of quick and dirty and gives you like a pretty big overview. So we can look at with different kinds of initial investments, but let's say you were starting from zero and you wanted to do this for 30 years. So we'll put in $30 or zero as the initial investment, and let's say we invested $500 a month for 30 years. I'm going to put in the estimated interest rate as 11%. I'll put in 1 for the variance range because it'll calculate 3 at a time. So this will calculate 10% and 12%. We'll put in this 11% because that's what our uh, average is. And then I'm going to change this compounding. The compounding is when the dividends, all of these buy back in. So when the dividend is paid, it buys back in. And I'm going to put quarterly, or excuse me, monthly, because they buy back in every month. And then hit calculate. So this says in 30 years, sorry, it's a little off to the right. This says in 30 years you'll have 1.4 million. This is starting with at with 0 in the account and contributing $500 every month. And yeah, if you were 30 and you were starting from nothing and you did 500 a month in exactly 30 years, so when you're 60, it'll have 1.4 million. And then down here you can click show table and it'll show you the total for every year. If we did 500 a month, 500 times 12 months, that means we're putting in $6,000 each year. So we can look at if at any point in time, if we were to stop contributing, what would the actual income be? So, for example, at year 20, the difference between year 20 and year 21 is a little over $50,000. If we minus off the $6,000 we put in, then it's basically right at $50,000. What I'm doing there is I'm saying 432,000. The difference between 489,000. So I'll just show you how you would do that. So I'll say at year 21 is 489. We'll just round it off. And then I'm going to minus the previous year, 432 equals 57,000. But during that year, with this calculation, it's saying, well, also we contributed 6,000. So if at year 20, we take off the 6,000 we would have put in, this will put us at 51,000. And if we were to stop everything at year 20, so if you started at 30 years old doing this, and then just stopped, this should be about $50,000 per year for life. If you started this at 20 years old, you would see this at 50. And then I like to do divided by 12, which shows me, okay, this will bring in a little over $4,000 a month. And yeah, if you did this and you planned to do this closer at like retirement, or sorry, if you started at 20 years old and you stopped at year 20, you'd have an extra $4,000 to work with when you were 40, which is pretty good. The last thing really is, you can look at when you would start, and then if you do this to retirement and assume you're also going to get Social Security on top of that, that's pretty cool. So $4,000 a month if we stopped at 20 years. But I think the real magic is when you hit $1 million. So with starting with nothing and doing $500 a month with this strategy, we'd hit our million at year 28. So let's do the same thing between year 27 and 28. So I'm going to take the amount from year 28 is 1115, and then minus the previous one, 994. So this says, and then we'll minus the 6,000 that we would have put in. So this says at year 28, this should bring in a little over 100,000 in that year, and I'll do divided by 12 months. So that's $9,000 a month in passive income. Hey, where did it go? Uh, $9,000 a month in passive income, which is pretty good. So once again, if you started from zero and you were 30, um, you would be 58 and you could stop. Um, Really, when you get that to $1 million, that's when to me it looks like you're getting into something you know you could live off of and have a pretty reasonable or highly reasonable income. Depending on where you do all of this, you might have to pay taxes on this. So if we did, um, times zero point 0.8 and did the taxes, we're looking at 92,000. Um, if we did all 30 years, um, the difference here. This is looking like it's coming in at almost $200,000 um, a year. So that's pretty cool. And the thing I like about this calculator is it just makes it really easy to try different things. Changing, well, what if I did $1,000 a month? Where would I be in 30 years or 20 years? Or if you're 30, you might not start at zero, right? Or with this particular part of a portfolio, you might have, like, let's say you have $10,000 saved up. So you initially buy all these positions. We'll still do the $500 contribution, but that'll just put us ahead a little bit. So I'll hit calculate, and um, this puts us at 1.6 million in 30 years, which is a little bit faster. And before we got to a million, basically between year 27 and 28, and now we're just going to get there a little bit faster. We'll save about 2 years, and we'll get basically to that $1 million mark between year 25 and 26, which is pretty cool. Obviously, the longer that someone holds these positions, holds the strategy, the bigger the numbers get. That's why you can see this curve is exponential. This is the effect of compounding, um, and so it can be fun to play around and think, well, what if I started with 20K and did calculate? Um, Now we're ending the 30 years with almost 2 million. Um, a quick look at this. This is like $300,000 a year, or we'll get to that $1 million mark almost at year 24, which is pretty good. Um, so it helps me see, um, initial investment, or we'll change this back to 10,000. I found that for starting out, the bigger I can make my monthly contribution, or maybe I set my monthly contribution to $500 a month, but then I kind of go conservative, and I say also, if I have extra at the end of the month, an extra $50, an extra $60, throwing that in will only speed this up. So I can see, um, what if I did $600 a month and do calculate. Um, this going back to starting with the $10,000. How quickly will I get to that million if I do 600 a month? Um, Again, about year 24. Um, if I could do $1,000 a month, This is really accelerating things. So doubling from the 500, right? If I do $1,000 a month, I'm going to get to that million at year 20, which is um, way faster than waiting all 30 years. Um, so make your money work for you. That is the main goal. So, um, yeah, getting up to, let's see, 250, where, I mean, we should end the year $260 a month times 12 months. It's 3,000. That's $3,000 a year, and that's all compounding, going back in, and when when we get up to that like $1,000 a month times 12 months, that will be 12,000 just going back in, and snowballing, snowballing. Um, that's what these graphs are showing, is that snowball effect. So um, if you want to keep following this portfolio into next year, see where we go, please think about subscribing. Hit the like button if you can. That way, this information might get to more people. And if you know any dividend funds that I should take a look at and consider putting into the portfolio, um, leave a comment and I'll take a look at it and see if I should add it into this. So, otherwise, thanks for watching.